has been like the perfect storm against Square as Bitcoin collapsed. We're in an economic downturn. Welcome back in YouTube. Now looking at a chart like this, you're probably thinking to yourself, this is probably a SPAC. Not the case. This is Block. This is Square. Going from a pandemic low of $52 all the way up to $289 and coming collapsing down back down to $64, actually hitting a new 52-week low at $56. This price has been everywhere. It's been a roller coaster for most investors. Now, to be quite honest with you, I was very bullish on Square over the last few years. Now, I will say I went over their quarterly report and there's a lot of things to go over in this one. So guys, let's get into it. By the way, if you're new to the channel, welcome in, consider subscribing, and smash that thumbs up. When we think about companies that hold crypto on their balance sheet and that are involved in investing in crypto, Block is amongst the top 10 companies in the world that carry crypto on their balance sheet. As we can see here, Voyager is just ahead of it. Not a conversation you really want to be in, but it is what it is. We move above that, and it's Galaxy Digital, Tesla, and MicroStrategy. Now, guys, with Tesla and Block, it's a little bit of a different story as these companies actually have businesses and crypto is more of icing on the cake for these business models. Now, Square's business model is mainly of payment processing, but now they offer so many more solutions, whether you want to talk about loans, banking, savings. They have solved a lot of small businesses' problems and made it completely easier to get transactions done faster and less stressful. Over the last 7 years, it's going to be hard to find a company that has grown as much as Square. You're talking about growth of 171, 53%, 49, 30s, high 40s again, 101%, 85%. This thing is an absolute beast. And the nice thing about the company was cash flows were starting to finally come through here. This company was actually free cash flowing and cash flowing pretty strong here. $713 million coming through on free cash flow in this monster growth company was the reason why it started getting this massive valuation and everybody wanted a piece of Square. Now, for me personally, guys, I am not a big crypto person, but if I wanted exposure to crypto, Square is probably one of the best ways to get exposure without actually owning the asset itself or even getting on some of these crazy platforms to buy crypto. So what you have in front of you right now is a Bitcoin chart. So this is a pretty ugly chart. Does this chart look familiar? Yeah, it pretty much looks like Square's chart. And if we take it right from the middle, the blue line is Square below and the top line is Bitcoin. And look at the sell-off that is in unison with Square right here. On top of that, we obviously know we've had a pretty significant pullback in markets, so a lot of stocks in general have become oversold. Now, I started digging into Square's financials, their recent financial reports, and to me, guys, some red flags, but some big opportunities ahead as well. If we're just looking at top line revenue, you would think that this would be a buy, right? But let's dig a little bit deeper here. Subscription and service-based revenue, almost 100% growth over here. Hardware revenue, a nice tick up in that as well. Bitcoin revenue, guys, ouch. When you have a high growth rate like Square, there is absolutely no sympathy for when you get these types of revenue declines. Guys, we've seen it with Netflix, Facebook, and a lot of other companies this year. When you have a premium of a multiple on the stock, there's just no exceptions. And Square falls along those lines, especially with the growth rate that expectations were for this company. We bring it down to the bottom line, earnings per share, which is most important for you guys. If you ever want to look at what a stock is doing, always look at earnings per share. Sometimes you can get lost in the numbers. Earnings per share means what you're getting as an investor. So a year ago, you were getting roughly 8 to 9 cents as an investor for their earnings. And what are you getting now? Negative 38 cents a share. Ouch. This is just awful to see, and I can understand why now that Square was crashing. On top of that, they put an additional 40 million shares on the market. So two things you definitely don't want to see when you own a company, and especially when you own a company with such a high valuation and expectations. When they bring it down to net income, it was a difference of $39 million in the positive in 2021 versus negative $207 million in the negative. Now, there was an acquisition of Afterpay's technology on top of it for the quarter. Seems like they may have overpaid for this company, but who really knows? Only time will tell. The pros are the actual fundamentals of this business are growing strong still. If you exclude Bitcoin revenue, this would have been a growth year over year for the company. Factor in acquisitions. Here's where the expenses came in and why the quarter was so bad. Everything across the board from product development, sales and marketing, general administration skyrocketed on the company. Now, the pros and cons when we think about this, they're obviously acquiring new companies. They're still in somewhat hyper growth rate. As we can see, they're still growing at a high clip here. So you're going to have these types of quarters where in an economic downturn globally, they're spending more on general administration and growing their business model. But there was also dilution. So we can see here the story unfolding, and it wasn't a good story over the last 12 months. So I caution you guys, if you don't like Bitcoin or don't believe in Bitcoin, you're probably going to want to stay away from a company that has so much exposure to it, especially if you think Bitcoin's going to zero. Problem is with this one, it does have a pretty strong business behind it that's growing at a very, very high rate. We have price targets as low as $70 and as high as $325, which would make it obviously a buy today. So guys, one thing I noticed about the company is going to be the margins here. Their margins haven't been anything too crazy here. Gross margins are in the 20% to 30% as they were growing, hit as high as 40% and back down to the 20% margins. And that came through for EBITDA margins around 2, 4, 10, and 1. So nothing really impressive when we talk about their margins. It's going to be a normal thing when it comes to high growth companies. The margins are not always going to be there first. It takes a while. But this one, I think investors are getting impatient with, as they were positive cash flow. They started showing progress in their margins with the recent downturn, acquisitions, and Bitcoin failing. I think people are getting impatient with the company, and obviously the dilution doesn't help as well. When we compare margins to the sector median, as we can see here, gross profit margins you want to see over 40%. Now guys, the hardest thing to do with this one is to put a price on it. We're looking at an EV to EBITDA of 304, which is just absolutely ridiculous. Now the sector median is sitting at 13, and I'm probably going to use between a 13 to 15 for Square in this example. So guys, I want to come clean. This is not financial advice. This is just what I'm trying to figure out what to pay for this company, as it's really difficult. Is Bitcoin going to go lower? Are they going to be impacted by the global events taking place here? Are the growth rates a little overrated? So I'm going to be very, very cautious here with how I run my numbers. All right, guys, so I'm using 20% revenue growth for 1 to 3 years. Now, you have to understand, this is a company that's been growing 40, 50, 60, 100%. So to use 20% revenue growth, I think is very, very fair, especially after the acquisitions. Year 3 through 6, I'm using 18% revenue growth. And from 6 through 10, I'm using 6% revenue growth. I think I'm being very, very cautious in my analysis here, guys. Okay, I don't think I'm doing anything outrageous. I think these are pretty easy numbers for a company like Square to hit, especially after some acquisitions. However, here's going to be the big problem, guys. I think their EBITDA margins are going to be negative for the next few years. I have them having negative EBITDA margins for the next 3 years. 3 through 6 bumping their EBITDA margins up to 5%, and 6 through 10 bumping up to 10%, which 10% was basically the best year that they've ever had. So I'm hoping by the time that this becomes more of a mature company, they are reaching those 10 to 13% EBITDA margins. If they can do anything above 13, if they can do anything above 10%, it's just going to give me a greater return on my investment. As I want you to understand that I am putting in some risk for share dilution here. Overall, balance sheet is pretty clean on this company, but I am putting in risk for share dilution, as they might acquire new companies. They have a pretty decent amount of stock-based compensation. So I just want to caution myself. I just want to build some extra protection. So I do get watered down a little bit in this example. You're doing things like this, it's just building extra protection for you as the investor. So when I run this and put a 15% rate of return, which I want to build a little additional safety here. So guys, as you can see, as I'm building this model, there's a lot of safety being built in this model. Now the whole unknown is going to be crypto, guys. There's just no way around it. They have a lot of crypto on their balance sheet, and that could deteriorate the business model if it goes to zero. No questions asked. But I also still believe that their business model is so strong that they still could get through that. But with that being said, I have a fair value of $42 with a fair price target in 2030 at $92. Now I'm being very conservative with these price targets here. And so that's kind of where I would start getting really, really interested in Square. Now, mind you, before all this happened, before the crypto collapse happened, before we had this market crash, and before Square's cash flow kind of went the other direction, it was a company that I was actually looking at in the $80 and $90 range. So, it just goes to show that when businesses make these slight changes, it impacts the price drastically here, because you're taking these impacts over 10-year time periods here, and nobody knows what's going to happen over the 10 years, right? They could turn this completely around. Bitcoin can go back up to 60,000. They can get their EBITDA margins into the positive much faster than I'm predicting. So there's a lot of unknowns here, but to build some safety and to get an idea of what kind of risk I'm willing to take on, this seems about right for me, guys. Leave a comment down below. Let me know what your thoughts are on my analysis, and also if you own Square or if you're looking to buy, what your thoughts are on that as well. As always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.